Somewhere online right now, someone is telling you the Iraqi dinar is about to explode in value. New notes, new rates, a confirmed announcement from the Central Bank of Iraq. But here's the question almost nobody stops to ask. What has the Central Bank of Iraq actually said in its own words on its own channels versus what online dinar promoters are claiming it said? Because those are two very different stories. In this video, we're going to walk through what is really happening with Iraq's currency in 2026, the real reform being discussed, the real economic pressures behind it, and the wildly different story being sold to people holding dinar notes in a drawer. By the end, you'll know exactly how to tell the difference between a central bank policy and a sales pitch. Let's start at the beginning. For more than 2 decades, a persistent claim has circulated online that the Iraqi dinar, a currency currently worth a fraction of a US cent, is about to revalue overnight to something like $3, $10, or more per dinar. Believers call this the RV, short for revaluation. This claim isn't new. Versions of it trace back to the aftermath of the 2003 Iraq War, when the Coalition Provisional Authority and the newly reconstituted Central Bank of Iraq introduced a new dinar to replace Saddam-era banknotes in an exchange program that ran from October 2003 to January 2004. What is new in 2026 is a real, verifiable policy conversation happening inside Iraq's government, but it's not the same thing as an RV. Iraq has been discussing a currency redenomination, sometimes called the Zero Removal Project. This means restructuring the face value of banknotes. For example, converting a 25,000 dinar note into a 25 dinar note without changing what that money is actually worth in the real economy. It's an administrative simplification, not a wealth multiplier. Central Bank of Iraq Governor Ali Al-Alak addressed the project directly while speaking in Doha in October 2025, describing it as a project that is still ongoing and one the central bank continues to plan for, while giving no timeline for when or whether it would move forward. A month later, in November 2025, the CBI went further and issued a separate official statement rejecting rumors of any exchange rate change outright, stating there was no intention whatsoever to amend the exchange rate of the Iraqi dinar. Separately, Iraq's government confirmed an official rate of roughly 1,300 dinars per US dollar for its 2026 budget, a rate that signals stability, not a sudden jump in value. So we have two realities running in parallel: a slow, technical currency reform process on one side and a fast-moving rumor mill on the other. Understanding the difference between them is the whole point of this video. Central Bank of Iraq Coalition Provisional Authority Joint Statement on the 2003 to 2004 Currency Exchange, Al Jazeera, January 15, 2004. Governor Ali Al-Alak remarks in Doha, October 2025 U.S. First Exchange, November 5, 2025. CBI statement rejecting exchange rate change rumors, November 2025 Iraq Business News. April 16, 2026. Iraq 2026 budget rate coverage U.S. First Exchange, January 9, 2026. Let's break down what a real redenomination actually is, because the mechanics matter. When a country redenominates its currency, it does not change how much real purchasing power its citizens hold. If a 25,000 dinar note buys a bag of groceries today, and that note becomes a 25 dinar note after redenomination, the new 25 dinar note still buys that same bag of groceries. The zeros are removed from the number printed on the paper, not added to the value in your pocket. Countries including Turkey and Brazil have carried out similar redenominations in the past as accounting and cash management reforms, not as a way to increase citizens' wealth. This is different from a currency's exchange rate strengthening on international markets, which is a separate process driven by economic fundamentals: foreign currency reserves, oil revenue, inflation, banking infrastructure, and investor confidence. Iraq's currency reform conversation in 2026 involves several real, documented pieces. First, banking rehabilitation. In July 2026, during Iraqi Prime Minister Ali al-Zaid's official visit to Washington, the Central Bank of Iraq and the U.S. Treasury Department reached an understanding allowing 7 previously restricted Iraqi banks to resume correspondent banking relationships in foreign currencies other than the U.S. dollar, as an initial phase tied to meeting compliance and governance standards. The U.S. Treasury's Office of Terrorism and Financial Intelligence clarified at the time that no bank had yet regained access to U.S. dollar transactions specifically. That remains a later phase, contingent on further reform. This is about modernizing Iraq's banking plumbing, not about revaluing the currency itself. Second, budget stability. Iraq's government has repeatedly confirmed an official exchange rate near 1,300 dinars per dollar for 2026, a figure consistent with the International Monetary Fund's July 2025 Article 4 consultation report on Iraq, which projected the exchange rate would average around 1,300 dinars per dollar through 2026 and described Iraq's currency system as a conventional peg, officially set at 1,320 dinars per dollar since February 2023. Third, the zero removal project itself, described by CBI officials as an ongoing internal, technical planning effort, with no new banknotes printed, no public education campaign launched, and no timeline announced as of this recording. None of this is secret. It's the kind of information that shows up in central bank statements, IMF reports, and financial news coverage, not in decoded intel from anonymous online sources. That distinction is the whole story of Chapter 4. IMF, Iraq, 2025 Article 4 Consultation and Executive Board Press Release, imf.org, July 8 to 9, 2025. CBI, U.S. Treasury Banking Agreement Coverage, Shafaq News, AGBI, and The National, July 2026. Iraq Business News reporting on CBI statements regarding redenomination, April 2026. Here's where we need to be direct. The specific claim that the Iraqi dinar is about to revalue to several dollars per dinar overnight in a single dramatic announcement is not supported by any verifiable statement from the Central Bank of Iraq, the IMF, or the U.S. Treasury. Let's look at what the actual evidence shows instead. The CBI's own 2026 budget guidance sets the exchange rate near 1,300 dinars per dollar, essentially unchanged from prior years. That is the opposite signal of a currency about to multiply in value. The IMF's July 2025 Article 4 report on Iraq describes the exchange rate system as a conventional peg near 1,320 dinars per dollar and projects that rate holding roughly steady through 2026, with gradual, fundamentals-based movement, not a sudden jump, as the realistic path for any future change. And when a rumor specifically claimed a rate change was imminent, a forged letter claiming the government wanted to move the rate to 1,600 dinars per dollar, which circulated in June 2026, the CBI didn't confirm it. It publicly denied it, calling it a forged document and part of what it described as a disinformation campaign. That followed an earlier, similar denial in November 2025, when the CBI rejected rumors of any exchange rate change outright. This pattern is consistent with what has repeated for over 2 decades. Claims of an imminent, massive Iraqi dinar revaluation circulate widely online, cite unnamed insiders, bank contacts, or leaked intel calls, and sometimes predict specific dates that have consistently passed without the predicted event occurring. Redenomination, the real project actually being discussed, is explicitly not the same mechanism. Governments that redenominate their currency typically do so because the numbers on their banknotes have grown unwieldy after years of inflation, and they want simpler accounting, not because they're about to make existing holders suddenly wealthy. It's also worth asking a simple logical question. If a central bank were planning to make a currency worth dozens of times more overnight, would it need to announce that plan through anonymous online commentators and private dinar guru call-in shows, rather than through its own official statements, the IMF, or established financial press, the way it has announced every other reform discussed in this video? Across more than 20 years of these claims, no mainstream financial outlet, the IMF, the U.S. Treasury, or the CBI itself has ever confirmed a scheduled date for a dramatic overnight revaluation. That sustained absence of any primary source confirmation is itself the evidence. Sources: IMF Iraq, 2025 article for consultation imf.org, July 2025. CBI denial of forged exchange rate document IraqiNews.com, June 17, 2026. CBI November 2025 statement rejecting rate change rumors Iraq Business News, April 16, 2026. If the evidence doesn't support the RV claim, why does it keep circulating? Understanding the incentives helps explain the pattern, without needing to accuse any specific person or channel of wrongdoing. Some dinar sellers operate as currency exchange businesses. Their revenue model depends on people continuing to buy Iraqi dinar notes as a speculative holding. A steady flow of buyers, motivated by the belief that a revaluation is coming soon, supports that business. Some online content creators build audiences around dinar updates, intel calls, or guru commentary. These formats can generate views, ad revenue, subscriptions, or paid membership access. A recurring, unresolved storyline, where the big event is always close but never quite arrives, tends to keep an audience returning for the next update. Affiliate links, currency exchange referral programs, and paid insider newsletters can also create direct financial incentives to keep hope alive, even without any new verifiable information to report. None of this requires bad intent from every person involved. Some believe the claims themselves. But structurally, the incentive for many participants in this ecosystem points toward continued anticipation, not toward independently verifying and reporting when a claim doesn't hold up. This is a pattern seen across many speculative asset communities, not unique to the dinar space. Uncertainty and hope can be monetized just as effectively as certainty can. The less a claim can be definitively disproven on a specific date, the longer it can be marketed. Recognizing this pattern doesn't mean assuming malice. It means asking a simple question before acting on any claim. Who benefits financially if I believe this? And have they shown me verifiable primary source evidence? Or just confidence? This isn't a fringe concern. U.S. federal authorities have taken real, documented action against Iraqi dinar investment schemes. The best documented example involves Sterling Currency Group, an Atlanta-based dinar dealer that also operated under the names Dinar Banker and GD Associates. The FBI and the IRS's Criminal Investigation Division investigated the company, and federal prosecutors alleged the business was built around encouraging investors to buy dinar in anticipation of a revaluation. On October 9, 2018, three of the company's principals, Tyson Rame, James Shaw, and Frank Bell, were convicted of conspiracy to commit mail and wire fraud, along with mail fraud and wire fraud. Rame and Bell were also convicted of making false statements to federal agents. They were acquitted of money laundering charges. In a separate case, the U.S. Securities and Exchange Commission brought a civil action against Joshua J. Hansen of Logan, Utah, alleging he sold investors on a dinar scheme built on false claims, including that he had access to a multi-billion-dollar account and personal contacts who could arrange a revaluation deal. According to the SEC's allegations, Hansen knew the investments weren't generating returns and used investor funds for personal expenses. Hansen signed a settlement agreeing to repay roughly $1.7 million to investors. Beyond individual cases, state financial regulators, including Washington State's Department of Financial Institutions, have separately warned consumers that Iraqi dinar can typically only be redeemed inside Iraq, since most U.S. banks and exchange houses cannot convert it, and that because no open exchange of the dinar exists, dealers are free to set whatever buy and sell prices they choose. The pattern regulators have flagged across these cases is consistent. Promises of extraordinary guaranteed returns, claims of insider government or banking contacts, and pressure to buy before a supposed deadline. On the currency's actual status, the facts are more mundane but verifiable. The Iraqi dinar is a real, legally traded currency issued by a real central bank, and it can be exchanged through legitimate currency dealers. Holding dinar is not illegal. The concern isn't the currency's existence. It's the specific, unverified promise of an imminent, dramatic revaluation being used to drive urgent buying decisions. FBI, seeking victim information in sterling currency group Iraqi Dinar Investment Investigation FBI.gov. SECV. Joshua J. Hansen coverage Forbes, August 10, 2016. Washington State Department of Financial Institutions. Iraqi Dinar Scams Consumer Alert DF.wa.gov. Behind every version of this story are real people making real financial decisions. The court cases in the previous chapter involved actual investors, people who purchased dinar based on promises of an imminent revaluation, in some documented instances losing money that was never recovered, as reflected in the SEC settlement requiring repayment to defrauded investors. When an expected event doesn't materialize on a promised timeline, the financial and emotional toll can be significant. Money that could have gone toward retirement, education, or emergencies instead sits in currency that hasn't performed as promised. There's also a quieter cost, the erosion of trust. People who feel misled by one financial claim often become more vulnerable to the next one, or conversely, become so distrustful that they avoid legitimate financial opportunities altogether. None of this is about shaming anyone who has purchased dinar. Currency speculation itself is illegal, if high-risk, activity. The deeper issue is the specific repeated promise of a guaranteed and imminent windfall, a promise that, based on the evidence available, has not been substantiated by any primary source, and that has already been the basis of at least one criminal conviction and one SEC settlement. If you or someone you know has made financial decisions based on RV claims, the most useful next step isn't shame. It's fact-checking future claims against official sources before acting on them again. If you're interested in currency markets or international economic development generally, there are more evidence-based ways to engage with that interest. Follow primary sources directly. The Central Bank of Iraq and the IMF publish their own statements and country reports. Reading these directly, rather than second-hand interpretations, removes a layer of potential distortion. Understand diversification. The SEC's Office of Investor Education describes diversification as spreading money across different kinds of investments so that if one loses value, others may help offset it. The classic don't put all your eggs in one basket principle, rather than concentrating savings in a single speculative currency position. Learn to evaluate a claim's source. Before acting on any financial claim, ask, is this from a named, official institution? Is it independently verifiable? Does the source benefit financially if I act on this? Consult a licensed financial advisor for decisions involving significant sums of money, particularly ones based on claims of extraordinary, guaranteed returns, and verify any advisor's credentials and disciplinary history first, as the SEC recommends. Stay informed about Iraq's real economic story, which is genuinely interesting on its own terms. A country rebuilding its banking infrastructure, managing oil-dependent revenue, and navigating real reform conversations like redenomination, without needing an exaggerated RV narrative attached to make it worth understanding. Curiosity about global currencies and emerging economies is a healthy interest. It just deserves the same evidentiary standard you'd apply to any other financial decision. SECinvestor.gov Beginner's Guide to Asset Allocation, Diversification, and Rebalancing. SEC.gov Investor.gov. So where does that leave us? Iraq is having a real, documented conversation about currency redenomination, removing zeros from its banknotes to simplify transactions, alongside broader banking reforms and a stable, unchanged budget exchange rate for 2026. What Iraq is not doing, based on any verifiable evidence from the Central Bank of Iraq, the IMF, or the U.S. Treasury, is preparing an overnight multiplication of the dinar's value. The scenario the RV claim depends on. The gap between those two stories is exactly where online promoters, sellers, and content creators have found room to operate for nearly 20 years. And it's the same gap that has already produced at least one federal fraud conviction and one SEC enforcement settlement. The tools to protect yourself are simple. Check the primary source. Notice who benefits from your belief, and be skeptical of any claim that can't survive contact with an official statement. If this video helped you understand the difference between real currency policy and online currency hype, consider sharing it with someone who's heard the RV claim and wasn't sure what to believe. And if you want more evidence-based breakdowns of financial claims like this one, subscribe for the next investigation. Stay curious, stay skeptical, and always follow the primary source. This content is for educational purposes only and is not financial advice.